Craig, what's up, man?
What's up, Brad?
Not much. So I'm gonna trick you because I didn't let you know we're not talking about appraisals today. There's been some
Yeah,
developments in that. So I did let Facebook know, but I know you've been on the phone talking to borrowers all morning, so you probably weren't aware. But I talked to Jeff. For you guys that don't know, that's watching this, we were obviously going to do a presentation today or a discussion about appraisals. It's definitely a hot topic in this market. We will be doing that hopefully next week. But Jeff, who works with Arrives, which is a management company that we order our appraisals through, Jeff suggested that we bring on one of their licensed appraisers because the licensed appraiser is, I guess, more able to answer some of the questions that I wanted to ask, right? Because it puts Jeff in a tough position because of compliance reasons. Maybe he gives the wrong answer. We just don't want to tell you guys the wrong thing. So we're going to postpone our meeting about appraisals till next Wednesday. And today, Craig, we're going to talk about second homes. So you ready for that?
awesome. I'm pumped.
All right, cool. So we'll make it quick today, obviously, because neither one of us had time to prepare. But I thought talking about second homes, Craig, was probably a good thing to talk about right now, just because there are going to be some changes with the financing available for second homes. Not so much the financing, but what you're going to pay for it. So we'll get into that, at the very end of our discussion here. We'll talk about, the changes that are going into play. But let's just start by like a mortgage perspective, like what a second home is.
Yeah, I mean, if we're talking about the certain types of occupancy, you have primary residence, you have what we're talking about today, second home, and you have investment. So a primary residence, just kind of reiterating, since we had previous conversations about this, is something you're occupying all the time, right? That's your true residence. You live there all the time. A second home is considered normally a vacation home where you occupy that residence a portion of the year. So doesn't mean that you can't rent out the property a portion of the year, but you're predominantly occupying that property a portion of the year. So a larger percentage you're occupying versus renting it out. And then an investment is you're not occupying it at all. You're renting it out. So those are the major differences between occupancy. I don't know what else that you wanted to address as far as, how it's treated at a qualifying level. Like, how does a bank determine whether a home is considered primary, secondary, or investment?
Yeah, we could talk about that. I guess we can get into that. That's a great. I actually had mentioned that, maybe talking about the major differences between which is down payment, things of that nature. But first of all, the second home, just because of what you said, I kind of want to touch on that just so people know. Yes, typically we look at a second home as a vacation home, right? So you can't be living in, like, let's say Marlton and want to buy a second home in Cherry Hill. Right. That just doesn't make sense. First of all, Cherry Hill is not a vacation home, but I have had people that did buy in a town like Cherry Hill as a second home. For instance, like, let's say you have somebody that primarily resides in, say, Virginia, right? But they have a house or they want to buy a house in Cherry Hill because they work out of Philadelphia and they're required to come up and work, I don't know, a couple times a month or whatever the case is. So I've had people purchase homes and use it as a second home so that they had a place to reside for, say, work purposes, right? Because it just made more sense to them opposed to, renting a hotel room out 3 nights a week or whatever the case is. That's like the thing, because like Kristen was, she was working for Grant Thornton and they were going to send her to New York before she started working with us. And she was going to have to stay in a hotel 4 or 5 nights a week. Right. So that would have made sense. Like, if that was going to be a long-term thing for her to maybe buy a house up in New York, a small house, and maybe, the cost of a mortgage might've been cheaper than paying hotel rent for 4 nights a week. But also, it makes it convenient these days because of Airbnb, right? So you have to live there part-time. So you could essentially, reside in the house, when you need to for work purposes, but then, rent it out on the other days that it's available when you're not there on Airbnb, and then essentially offset your payment. So I guess I kind of wanted to mention that because a lot of people, they go right to thinking, I got to buy a house down the shore. I got to buy a house in the mountains, or I got, whatever the case is. That's not always the case. But also I've had people that, like I said, want to buy in the next town over and call it a second home. That's not going to work.
Right. I feel like it's a make sense approach, right? That if you have an explanation behind your motivations for purchasing as a second home, then most likely we will treat it as a second home. So another example, that we've encountered before, and I'm sure you may have encountered it personally when doing loans, is that sometimes, maybe you have family in New Jersey, but a portion of the year during the winter, you want to live in Florida, right? So you don't necessarily have to be on the beach to buy a second home or in a traditional vacation area, but you might buy a single family home, right outside of Orlando, right? And you want to live there because it's warmer and you're retired during the colder months, right? Right now is a perfect time to buy a second home in Florida and enjoy their nice weather. And you live in New Jersey during the summer months, right? Maybe because your family's there, you have your grandkids, you have, friends and family from this area, and you'd rather live a portion of the year. So that's another example of, how that might work, but you're not buying a second home as a traditional vacation home, so to speak.
Yeah, shameless plug too, guys. I'm actually pursuing my Florida license because of all those reasons that Craig said. I'd like to have a vacation home. I thought it would be cool to live in a place in Florida where I can surf and stuff like that, but also be close enough where I could take Lennon to Disney World and Presley eventually when she's here. So,
and Brad, just keep in mind that you don't need to live on the beach to buy the second home.
No, I want to live on the beach, man. It's just I feel like it's so much more affordable to buy a beach house in Florida or something relatively close to the beach, opposed to like, say, Long Beach Island or something. Like, I can't afford to be there. But yeah, I mean, it's, just so you guys are looking in Florida, I'll be licensed there soon. So we could definitely help out. So yeah, so that's good. I think that's, some great points there. I just kind of we wanted to go over what the true definition of a second home is from our perspective. So I think the next thing we should talk about briefly is just the major differences between buying a second home versus like an investment property per se. Obviously, or a primary for that matter. So the first thing that comes to mind for me is the down payment requirement. It's kind of like right in the middle between a primary or an investment property. Do you want to elaborate on that, Craig, or do you want me to take that point?
As far as qualifying?
No, just the down payment requirements.
Oh, the down payment. Sorry, I missed it. The down payment requirements are slightly different. I feel like with a conventional loan, you can go up to 97% financing. So in some cases, up to 95% if you're not a first-time home buyer.
On a primary.
On a primary.
Yeah, you're not
for the second home, the minimum down payment requirement is 10%. And a second home, just so you know, it can't be a multifamily home. I'm pretty sure of that. I'll double check that, but it has to be a single family townhouse, condo, that type of situation. It can't be a multifamily. So, if you're, buying $100,000 house, 10% down would be $10,000. Whereas $100,000 house for a primary, you might only have to put down $3,000. So the amount of money you have to put down is different. Also, mortgage insurance is different, right? So for a primary residence, mortgage insurance could be slightly more expensive if you're, borrowing above 80% of the property's purchase price versus a primary residence, which would, it would be a different factor, or probably be a smaller amount monthly. There are reserve requirements for second home. I won't get too much into that. Whereas a primary residence, you typically don't need reserve funds for primary. So those are the major differences. All have to go through an automated underwriting system, just like a primary residence. All have to meet the same guidelines for debt to income ratio for conventional loan standards. So it's pretty much just what we're talking about now is down payment amount. Mortgage insurance costs a little bit more.
Here's I just pulled this up just so you can see. So it just the down payment requirements for a purchase,
Can you zoom in on that so they
yeah.
can see, Ray?
Yeah. So basically, like you were saying, with the second home, this is kind of like the down payment requirement. And as you can see, it's a 1 unit. They don't have an option for a 2 unit, just like you said, because a 2 unit's an investment property. They're not going to occupy both. So that would fall under, either being a primary, because we've talked about that in previous weeks, that you can buy a house, a 2 unit, and occupy it as a primary. So you can obviously see up there in the matrix that you can do a 2 unit and it be a primary. But with the second home, like you said, it is subject. You can only do a 1 unit, and that's your down payment requirement. So this kind of maps it out, as you guys can see. Like if you're trying to purchase a second home versus an investment property, the second home is a 10% down payment. The 90% is loan to value, so that's the percentage of financing you're going to get, right?
Why you have that up, Brad? We didn't mention about refinancing. You can refinance a second home. You can refinance just, the mortgage and settlement fees, which would be considered a rate and term, which you can go up to 90%, as it says on here. But you can also take cash out. Whereas a primary residence, you're limited to 80% of whatever the property value is. And in this situation, you can only take up to 75%. So that's a difference too. We just were kind of concentrating on purchase, but you can take additional funds out, in addition to what you owe on the mortgage and settlement fees, up to 75% total loan against the value of the house.
Yeah, and it's a good point to bring up, man, because like you said, we are kind of concentrating this on purchase, but if you're looking to buy a second home right now, but if you own a second home, now is a great time, if you haven't, to review your mortgage. I mean, Craig, you'll be the first to admit, and some of our clients that we've been speaking with, the rates are getting beat up right now. Like they're not like they were a week, 2 weeks, 3 weeks ago, but they're still, historically speaking, very low. So if you have a second home and you haven't refinanced yet, now would be a great time to review your mortgage, because who knows where the rates are going to be 6 months from now.
Yeah, and if they go up like we think they're going to go up, it's going to be more expensive for you to wait. So the longer you wait to have that review, the more expensive it becomes. So, I don't know if you wanted to touch base a little bit on what are some of the changes that we see upcoming. I know you mentioned a little bit about it. I don't know a ton about it. I just know that the costs for
let's just talk first of all, like the differences, right? Down payment with the investment.
Wi-Fi name or password has changed. To update your Wi-Fi information, go to the
Alexa. I don't know the password in there. I got to get it from Greg, and it's not. And Lennon, she made me plug it in, so whatever. She wanted to hear Alexa. The major difference, right, is how you're going to occupy it and the down payment requirement. But up until now, in terms of pricing goes, right? So like if you're buying an investment property, you're typically going to have a higher interest rate than if you were buying a primary residence, because there's a thing called LLPAs, loan level pricing adjustments. In layman's terms, it's basically risk-based adjustments. That's what I like to call them. And what there are is there's adjustments based on the risk in the loan, right? So you're buying an investment property opposed to a primary, it's riskier, right? If you're buying a condo versus a single family, it's riskier. If you have a 640 credit score opposed to a 740 credit score, it's riskier. So these things attribute to what type of rate you're going to get. And up until recently, and actually up until this year at some point in April, the rate for an investment or a second home was very similar to the rate on a primary home. But Fannie Mae just released information, and I'm just going to read it so you guys have it here. The updated LLPAs are going to change for loans purchased on or after April 1st, 2022. And this is why I thought that talking about second homes today, since we didn't do the appraisal thing, is relevant, because there's going to be major changes to the pricing when we price out a rate for a second home. So when that goes into effect, it's not going to be similar to what a primary rate is anymore. And if you remember, Craig, I think 6 months, a year ago, the second home and investment properties were affected, the whole COVID thing. Rates went up and it went away. So there's no guarantee that this is going to be a long-term forever thing, but they're not saying whether it is or it's not, or at least I haven't read anything about it being or not being. But the reality is right now that, in the next couple months, you're going to see rates go up drastically on a second home versus a primary, and not just based on the market, just comparatively speaking, like whatever the market looks like, it's going to be higher at that point for a second home than it would have been if these loan level pricing adjustments didn't go into effect. So obviously the reason I thought that it was a good topic to speak on today is because if you're thinking about buying a second home, I think we'll all agree that home prices aren't going down. I think they're here to stay, right? Unless something major happens, but the reality is interest rates are going up, and this is just going to make it harder to afford a second home in the future when these loan level pricing adjustments go into play. So if you guys are thinking about buying a second home, don't wait. It doesn't cost anything. Like we've said that over and over again, we're here to help. The process of getting pre-approved is very quick and easy. We make it very seamless here, and there's no expectations or obligations, right? So we can run numbers and tell you what you're qualifying, what it would look like to buy an investment property right now in this market, and we're not going to hold you to anything. Craig, did you have anything to speak on that I might have missed?
No, I feel like you touched on what I would talk about. I feel like just in general, so people understand that these costs that Brad are talking about, just to put in perspective, these loan levels adjustments in pricing are absorbed in only two ways. It's either your interest rate goes up to absorb those costs, or you're paying out of pocket to absorb those costs. There's only two ways that those costs can be covered. So a lot of what you see as far as interest rates are concerned now with out there is normally related to primary residences. So as a consumer before, you could look at where interest rates are online and say, this is probably where the rate is. And typically, let's say a year ago, year and a half ago, whatever that time frame is, you would be able to say, okay, the second home is going to be right around that. There's going to be a big difference. And that's kind of what we're talking about now. So the rate that you see online could change by 0.5% to 1% from where it normally would be second home wise. So that's why it's super important to get out there if you're looking for a vacation to do something, because 0.5% to 1% difference in your interest rate on a shore house that's 600,000, 700,000, 800,000, that's a lot of money, And if you can kind of get into a property in a time frame before that adjustment takes place, you're going to save a lot of money by doing that, short term and long term. So we're here and available to talk to you, to go through that process and make sure that you get your pre-approval letter as quickly as possible. But I feel like if you were pre-approved in the past and you want another review done, that's something we can do. But changes are on the horizon, and it's better to be proactive now and do that instead of waiting until the last minute and trying to work out a higher expense cost later. So.
Yeah, I agree, man. Well said. So yeah, that's it. We're going to keep it short, guys. We're right at the 1 o'clock mark. We try to keep these to a half hour or less. Obviously today we got started a little bit late. I apologize if you were excited to see the appraisal presentation or discussion that we were going to do. But I'm even more excited now because we have another guest that's going to be joining us who actually is in the field of doing appraisals. And I think he's going to have a lot of value to bring. He's going to answer a lot of questions that, people are wondering about, especially in this market. Obviously, housing prices are going up, and that's one of the biggest hurdles is, getting the value. When you buy a house, is it going to come in at value? And a lot of sellers are requiring that you're making up the difference. So no contingencies in the contract. So I just think it's a hot topic, and I'm excited to have them on next week. Hopefully you guys are. So definitely tune in. And obviously, if you guys need anything, there's a bunch of ways to reach out. You can see the things scrolling at the bottom of the screen right here. You can visit our website. You can email us. You can call us. You can use that nifty little QR code there to scan. Maybe you're watching this on your desktop and you have your phone handy. Check it out. At the very least, it's cool. I built it myself. And also, there should be some links in the text above or below, depending on where you're looking at this. So Thanks for joining us as always, guys. Craig, thanks for bringing all your expertise and knowledge to the presentation and discussion here. And I'll probably be talking to you in a few minutes anyway, because you're about 10 feet away from me. So,
Yeah,
all right,
man.
guys, over and out. Have a great day. And thanks again for always tuning in. Talk to
Thanks,
you
guys.
soon.
Enjoy the day.